Hello, good afternoon, and welcome to this weekend's gold market analysis. Last week, we captured the bullish move as gold picked up momentum once again. Remember, we saw price break out of the resistant line of that descending channel. We marked out prior to the beginning of last week, and of course, we saw price begin the momentum from the $3,310 area to close around the $3,360 zone, as you can see here. Now, one key thing that stood out for me was how price closed the week around this particular zone, a level that has consistently shown selling pressure since the beginning of this month. It's quite evident if we look at the chart here on the 1st of July, we saw how buyers found it difficult to break through. The same thing happened into the later part of the first week, and right now, price is back into that zone, closing around that particular area. Now, the big question is, will price finally break through the zone, or will it respect it yet again in the coming week? Of course, looking at the character of price action last week, it shows that gold still remains strong and steady. The FOMC minutes were slightly hawkish, keeping rate cuts off the table, which applied some temporary pressure on gold, but geopolitical risk and volatility in industrial metals kept gold well supported. My main concern right now going into the new week is the persistent selling pressure from this $3,360 zone. As you can see, buyers continue to find it difficult to break through that area. And for me, it's become suspicious, almost like a potential exhaustion zone. That's why it is wise for us to wait for confirmation before committing fully to the uptrend. Now, let's shift focus to the week ahead. In fact, we've got a handful of high impactful economic events coming out of the United States, and this could play a major role in shaping market sentiment. So, the first event for the week is coming on Tuesday, July 15th. We are looking at the CPI on Tuesday. We have the PPI on Wednesday. These are critical because they influence the Fed's next move. So, if inflation comes in hot, that could delay any rate cuts, strengthen the dollar, and of course, weigh on the price of gold. Then on Thursday and Friday, we are looking at the retail sales data and the consumer sentiment index. This will be giving us clues about the health of the United States economy. If the data disappoints, we could see a risk-off mood that might support gold as a safe haven. So right now, we are at that point where gold is clearly hesitating, a decision zone. Of course, we saw what happened in the last 8 hours before the market closed. We saw a little bit of consolidation, shooting star candle, a doji candle to close the week. So it tells me that prices is stuck between what the data is saying, how the Fed might respond, and the overall uncertainty around global trade. Whether we see a clear breakout above the 3,360 or a continued rejection at that level will largely depend on how the market reacts to this incoming data. Now, let's go into the chart from a technical standpoint to read and break down what's really informing the key zones I'm watching, what price action is telling me about current market psychology, and most importantly, how I am planning to approach the market in the coming week. Before we delve into the details, it's important that I let you know that everything I share here is based on my personal chart analysis and trading experience. It's not financial advice, so as always, trade responsibly. So, with that said, here, let's dive right into the business. As always, my first point of contact is going to be on the 4 hours time frame, and of course, we have a clear-cut picture of what has been going on in this market since the beginning of this year. So, since January, the price of gold had consistently found higher lows, and to capture the higher lows, we have this green dotted ascending trend line, which further emphasized the strength of the buyers in this market. And we all know how we use our ascending trend lines. As long as price remains above them, we want to be looking out for patterns and structures that support buying ideas. Now, let's zoom into what has been going on in the last 3 weeks thereabout, which is going to be where my center of focus is going to be. Now, zooming in, this is what I am looking at. So, what I did here was to capture the character of price action since mid-June. That's about 4 to 5 weeks of historical data. And it is quite clear that we had a retracement. Where is my key tools? Okay. So it was quite clear that we had a retracement from the 3,445 zone here, mid-June. And we saw how price found lower highs, right? We saw lower lows, lower highs, and then we saw price break out of that structure once again. So as a result of this, we have a beautiful descending trend line, which is obviously my primary trend line, and this is going to be my secondary trend line. Now, we saw price broke out of that primary trend line last week to close around that 3,360 level, a level which has a character that emphasized selling pressure, as you can see here. And we are wondering if that zone is going to be broken or not. Now, to help me navigate this whole area next week, I have my key level at the 3,330. Interestingly, it shares a confluence with the major ascending trend line that supported this bullish momentum since the beginning of this year. And with the situation we have here, I want to still maintain a bullish bias in this market, but we'll need to see how the market reacts to the 3,360 at the beginning of the week. If price can come back to retest this primary descending trend line, and of course the key level at the 3,330, and that major ascending trend line, continued buy pressure here will welcome more buying ideas. But if it so happens that the 3,360 gets broken and retested at the beginning of the week, then I will continue the uptrend move. Now, with that said here, in as much as I am looking at a potential uptrend going into the new week, which is obviously backed by geopolitical tensions in the Middle East and, of course, uncertainty around the global trade tension, we cannot ignore the possibilities that sellers can also come in. We talked about how the Fed sounded a little bit hawkish in the Fed minute that was published last week, where interest rate cut is off the table at the moment. So, as a result of this, what are the chances that sellers will come in? And if sellers come in, where will be the most appropriate area for me to join and sell? Now, since we already have a major ascending trend line here, which has been supporting the uptrend since the beginning of the year, remember, at no point in time have we seen price action break down this ascending trend line. So if it happens this week that price breaks down that ascending trend line, and if we are lucky to have a retest of structure, this is likely going to be welcoming selling ideas for me. In fact, it lines up with the fact that price remains below the descending trend line, below the key level, and of course below that major ascending trend line. So this is basically what I am looking at going into next week. And of course, after monitoring price action during the early hours of next week, I will be with you in the comment section to give you an update on what I think is going to happen after seeing how the price plays out here. If this video helped with your independent decisions, give it a thumbs up and drop a comment below. Let me know how you are approaching this market next week, and don't forget to subscribe for more analysis like this. Thanks for watching. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye.